Hi everyone, welcome to the Mighty Trades channel. My name is Johar and welcome to another episode of Weekend Technical Analysis. So apologies for not uploading a video last week, but the week before that we ended our episode with Deepak Fertilizers. So let's not wait any more time and move on to ISGEC Heavy Engineering. Alright, so the stock got listed on NSE on May 21st, but it's been listed for a much longer time on BSE. So let's go and take a look at a much larger picture of the stock. Let's switch over to a monthly chart very quickly, and we can clearly see here that ISGEC had a great bull run back in 2014, which lasted till 2015, then a deep correction, then again a stellar run, and then from Jan 2018 onwards it was on a huge downtrend. It saw a massive run up again in 2020, and now again it's in a downtrend. So as of now there is no bullish momentum in this stock, so better to avoid this for now. Moving on to Chalet Hotels. Chalet Hotels is looking really interesting. So if we look here, we can clearly see a massive consolidation that was happening here, but there has been a good pattern of higher highs, lower lows. As we can see, this was a higher high, then this low was the same as this low, then again a lower high again, but then a higher low, a lower high but a higher low, and then again we can see the pattern continuing, a higher high here, lower low, another higher high, and now it's been consolidating here since the past 8 to 9 weeks. Now we're looking at the weekly chart. So with the tourism industry doing well and unlock happening all across the place, I think any nice strong weekly close above 317 can definitely take this chart towards its lifetime high levels, which is somewhere around here. So there is a good 19-20% gain to be made in this move. So it's a short-term trade that can be taken, but this move will come very quick. As you can see here, it doesn't take more than 2 weeks for it to move like 10-15%. So it'll be a very quick move that will come up. So if you can capitalize on it, well and good. Otherwise it's okay to avoid the stock right now. If we look at GE shipping, it's we're looking at the weekly chart, and if we look at the monthly chart once, then we can see that it's been stuck in this range for a very long time. It comes to this level, goes back down. So it needs to give a decisive close above, I would say, this level to see any sustained long-term bullish momentum. Until then, it's just better to avoid the stock for now, but a nice monthly close above this level will definitely take it to newer highs. Moving over to Maharashtra Scooters, don't see any momentum here. In fact, if we switch over to line chart, then we can probably see a head and shoulder pattern forming over here. So this is the left shoulder, this is the head, this is the right shoulder, and if this support is taken down, then we will see the stock fall further down to maybe these levels. So to calculate the target, you just have to take the depth of the head, put it down here below the neckline, and you will get your downward target. So for now, it's better to avoid. Any bullish momentum will only happen if this stock gives a successful weekly closing above 4084, because that would sort of negate the head and shoulder or invalidate that pattern. Until that happens, better to avoid the stock. Looking at Inox Leisure, this stock is doing well. It's trading at its lifetime high right now. It's corrected along with the market, but the cinema industry is doing pretty well right now. A lot of people are going watching movies. Good blockbuster movies are coming out, but I'm not too sure about this. I mean, these guys would have accrued a lot of debt right now. Yeah, if you look at the debt to equity, it's 4.26. There's no return on capital, and overall the industry is reviving, but they have accumulated a hell lot of debts over the past couple of months because of COVID. We can clearly see here they were a nice profitable company generating profits, but over the last 2 years you can see that there hasn't been much in terms of profitability, because they have taken on a lot of borrowings and that can be visible in the balance sheet right here. Yeah, so we can see they took on a lot of borrowings to get through COVID, and with the interest rates going up right now, this could impact their interest which they have to pay on the borrowings that they've recently taken. So that can be a bit of a challenge and a bit of a downer to these companies. Overall, the shareholding pattern looks okay. FIIs are pretty much stable, above 15%. DIIs are also pretty much stable. Public holding is also pretty much stable. So don't see a lot of accumulation or distribution happening. But I would rather avoid this kind of a stock in this kind of debt-ridden environment, and with the fears of recession going around. I wouldn't be surprised if these kind of companies were the first ones to take a hit in terms of the profitability. Moving on to Greenlam Industries, this stock is also trading at its lifetime high, but the structure is now looking a little weak because it's constantly coming and basically testing this level, right? It's tested this level once over here, then the buyers took the stock up, and then again it tested the level once here, then again buyers came and tried to hold it here. But now this is like the 1, 2, 3, 4, 5, the 6th time it's testing this level. I think if this level is broken, then the stock will fall flat directly down till 250 rupee levels easily. Currently I would avoid this stock right now. The structure is not looking very good. In fact, if we switch over to the line chart, we can probably see something like a double bottom forming here. Let's see in the monthly chart if it's more clear. Yeah, on the monthly chart it's super clear. We can clearly see, let me change this. Yeah, you can clearly see that on the monthly chart we can see a M sort of a pattern that's forming here. So this is a M, this is like a double top formation, and the double top has already broken down. Let's switch over to candlesticks again. Okay, so the double top was already broken, this support was broken, and the stock has come back down to its previous support level, which is around this area. But if this is also taken down, then the stock can easily fall to between 270 and 230 levels very, very easily. So better to avoid this stock right now, in my opinion. Any further bullish move will only come if there is a weekly close above 400 rupee levels. Moving on to NCC, complete downtrend, no real move over here. JPPOWER had a very solid move back in November. I in fact made some money also in JPPOWER. I booked like 100% profit. I had bought it at 4 rupees, sold it at 9. But now it looks like it's in a downtrend, in a medium-term downtrend. Even though energy companies are doing well, something's happening in this stock. It's just been consolidating here for a pretty long time now. So don't see much promise right now from the stock. Plus, this is a company I believe they have a very high debt burden. Let's just quickly take a look at it. Okay, so debt has gone significantly down. If you go to the balance sheet, we can see that the debt has gone very, very significantly down back in 2020 and 2022. So that's a good sign, but it's staying close to 5,000 for the last 3 years now. So let's see. I don't see much upside right now with the current market environment, but if we can get it back at 4 or 5 rupees, that would be a good time to accumulate. But right now I would avoid this kind of stocks. Looking at KCB is also trading at its all-time high levels right now. I've also drawn this line here, and there was a nice close above this line back in the month of May. However, it's been correcting for the last 3 weeks. Hopefully it takes support here. If it does, then we can see a further bullish momentum continuing into the stock. Let's take a quick look at the fundamentals of Ksb Limited to understand what it does. So Ksb manufactures a range of standard industrial end suction high pressure multi-stage pumps, submersible motor pumps and monoblock pumps and other value-added parts for the agricultural, wastewater management, energy, nuclear and conventional power and oil and gas sector, as well as other industries. So this is a good sign because oil and gas industry is doing really well right now. So there would be a lot of demand for this product, I'm assuming. Also, if you look at the fundamentals, then it has zero debt, extremely good. Intrinsic value as per this website is also 782. That is also a good sign. And ROC is above 20, which is an excellent sign. Let's take a quick look at their quarterly results. Quarterly results also seem to be decent. It looks like it's posting close to highest ever net profit at 40 crores, which is good. If you look at the profit and loss statement, then this is the last 2 years have been the highest ever numbers that the company is posting in terms of net profitability. That is also a good sign. If you look at the balance sheet, borrowings is extremely low, reserves have been going up. This is also a good sign. And if you look at the shareholding pattern, then the shareholding pattern, promoter is holding close to 67%. FII, very small holding of 2 to 3%. DIs are holding 11%, but they seem to be reducing their positions here. And the public is holding less than 20%. Even in that also, there seems to be a big investor here. I don't know what this name is, but it's holding close to 3.10% here. So approximately a 16% holding the public is holding. Overall, the chart structure looks very good. Super massive run back in November 2020, moved from 400 rupees to 1400 rupees. Then came a deep correction to 1000, and then from there it's moved back up, and then it made a higher low, then a higher high, and now it's probably making another low. So maybe this is a good chance to buy the stock at this level, and we could see this trend continuing further. What could be the target? I'm not sure. Let's try fib retracement. Let's switch over the here. Let's take it from here. This closing price, this is from where the correction started, the closing price here. And the first target that we clearly see is from the current price is here, which is 1552, which is 12.86% gain. And then there is the next target of 1902, which is a 38% gain. Let's also take a quick look at some trading ideas. If there are some other traders who have identified the stock, and we can clearly see this person posted an idea on May 21st. He also had the same line here. There was a breakout identified. Now what target has he given? Target is there's no target given here, just a breakout that's been identified. If you look at this individual has posted a target of 1232. Sorry, the target is 1472, which is a gain of close to 9% from this breakout level. And don't see any other ideas that are currently making sense. So these two are the targets that we can go for, it looks like. So let's add this to our tracker. The stock is definitely looking good. If we decide a stop loss, then the stop loss will be this low. A break below this low will obviously not be great for the stock. Let's quickly draw our long position here. Okay, so this is the target, second fib level. This is our stop loss right about here. So a potential loss of 12% for a gain of 38%. Okay, let's start noting this down. KSB, month is May. Oh sorry, the month is June. The date while I'm recording this video is 11th June right now. And the price as of 11th June is 1373.90. Okay. Okay. Stock trading at lifetime high levels, works in oil and gas industry, which is currently booming due to high oil prices, good bullish momentum, and already corrected over last 3 weeks. Okay, so what's our target entry price? We're going to keep it the same what it is right now, and hopefully we'll get it for cheaper next week. Our target is in this case going to be 1898. Potential gain of 38%. Our stop loss in this case is going to be 1202. Potential loss of 12%. This trade is currently active and the current price should start reflecting here. Alright, good find. KSB looks like a promising chart. Let's go over to IRCON International. Nothing great happening here, so better to avoid. Looking at RCF, then we can clearly see that I have made some drawings here already. It was consolidating in this sort of a channel over here, then it gave a breakout above this level. You know, this one candle broke out from this channel, plus it also broke out from this level right here, and then it made this high. Now it corrected, retested the high of this channel, again made a huge move over here, and now it's been correcting for the last 3 weeks. Now this is a level that the stock has been trying to break since a very long time, right? You can clearly see here, if I switch over the line chart, then here is one resistance level. Okay, then this is another resistance level. Okay, so this whole zone of 98 to 105 rupees has been a resistance for the stock since 2010, and if we go in further up, then this resistance was created back in 2007. Now RCF is a government company. It has a lot of deep value unlocked in it, but as with any government company, you know, they don't really do too well on the stock market because their job is to serve the public, pay dividends to the government, and not really work for profitability. But this chart technically looks very promising. There's some very good volume buildup that's been happening here, and fertilizer companies are doing well right now because fertilizer cost has gone up. Our government has agreed to pay subsidies to more farmers so that fertilizer sales are not affected. So in that case, fertilizer companies are doing well, but there are too many resistances here. I would only be comfortable buying this stock if the chart gives a close above 104 rupees. Then the next target becomes this previous resistance of 120, and after that, sky is the limit for the stock. So let's see, if we get a closing above 104, then we can potentially take a trade in this stock later on. I'm not adding this to our tracker right now because it's very volatile. We can see clearly how large the moves are. I will add this to a tracker later on if it gives a closing above 104. Moving over to Religare Enterprises, then this stock is also trading at rock bottom levels right now, but it sort of made like a rounding bottom over here, gave a breakout from this previous resistance zone, moved up. Now it's consolidating for the last couple of weeks over here itself. Now if we get a breakout from this level, obviously next target goes to 193 rupees, but if it breaks 193, then the next target comes to about 328 and then 421 onwards. Now let's take, now there's no chart pattern that I can see over here honestly in this chart right now, but let's take a quick look at the financials to understand if the company has improved over the years. So the stock listed at around 584 rupees, and since the day it has been listed, it's not given any return to its shareholders. So now let's take a quick understanding of how has the performance been since what year is this? Since 2007. Okay, if you go to the yearly numbers, these numbers go back to maximum of 2011 on screener, and at that time the sales are at 2400 crores. Now the sales are at 3224 crores. So not a very big massive jump in terms of sales. We saw the sales go up to 4000 crores, 5000 crores close to in the middle, then it came back down. So nothing really encouraging too much over here. Operating profit has also been up and down, as we can see. Margins got terribly crushed during 2018, 2019, not sure why. 2022 also the margins are not great. They are paying a whole lot of interest. The profit before tax has been negative for multiple years, as we can see since 2017. It's not posted any profit whatsoever, and the net profit has also been negative for multiple years. There's only 1 year where I can see that the company posted good profits. If you look at the borrowings, then one good thing is that the borrowings are coming down, which is the only positive sign I'm currently seeing in this stock. The reserves have gone into negative, but the borrowings are going down. That is a good sign. Now let's take a quick look at the shareholding pattern to understand if there is something interesting happening here. So promoters are holding nothing, zero. FIIs are holding close to 19.59%, and that holding has been going up for the last 4 quarters. So that is an encouraging sign. DIIs have been booking their profits here, it looks like, or booking their losses. And if you look at the public shareholding, then over here we can see that 78% of the shares are being held by public. But there seems to be many big fish investors in this stock. So there is Puran Associates holding 5.7%, Quick Trading 3.76. Let's try and find some big name investors here if you can, who can probably give more weight to the stock. So there's Plutus Wealth Management holding 7%. I see Ashish Kacholia is here, but he seems to have exited the stock completely, or probably holding less than 1%. There was Mukul Mahavir Prasad Agarwal also, who seems to have exited the stock. There's Samco Industries. I don't know who Singularity Holdings is. Mukul Agarwal was also here. He's also exited the stock. So overall, I don't see any big name investor invested in the stock. There is good volume here, but it's been like consolidating since a very long time now in this range. I think if it breaks this is the target you should hold, take it for, and then just exit the stock. I don't see any real reason why this company should go up. It's not doing extremely well fundamentally. So in the kind of market that we are right now, it's better to just avoid fundamentally weak stocks. Looking at Indico Remedies, this stock broke out from its resistance level back in which it established in 2015. It broke that level in May 2021, gave a good up move, and now it's in a sort of a Dow theory downtrend where it's making lower highs and lower lows. So it's consolidating in a downward channel. Let's push over to the line chart here, and we can clearly see that this is a downward channel that it's been working in. And currently I don't see any reason why we should take a trade in this stock. Yeah, so this is channel is in right now. You could probably do some swing trading here, buy it at the bottom of the channel, sell it at the midpoint or at the top of the channel. Even selling on the midpoint would make some decent money. Let's see here, if you have to buy it, let's say the stock is to come down here and the midpoint is here, so there is a 10-11% gain that can be taken if you can buy it at the bottom of this channel. Moving on to Raymond is looking very interesting. Alright, so we are looking at the weekly chart. we can very clearly see this was a very strong resistance over here for the stock, which was established back in August 2018. Then we saw a nice steady run up happening in 2020. We got a breakout. The stock went up to its lifetime high resistance right here, and now the stock has has corrected and is consolidating here. It's not made a very big bearish candle, but significantly a big candle here, moved down by 15%. Let's look at the daily chart once to see how the daily movement was. Okay, so clearly we can see that on the very next day of this large candle, we saw a huge red candle here, a lot of profit booking, directly minus 10%, and it's come down. Now there is a very high possibility that it can come and retest this breakout zone and consolidate over here and then plan to move up again. But let's take a quick look at the fundamentals to understand if it deserves to move up again first. Okay, so Raymond Limited, market cap is 6,450 crores. ROC is decent, nothing too great. There's a 99% debt to equity ratio, which is not really good. Now let's take a quick look at the financials to understand how the company has been doing. So last quarter, highest ever sales, that's a good sign, and highest ever net profit, again a very good sign. If you look at the yearly numbers, then close to highest ever sales, not the highest ever sales by volume, but yeah, definitely close to highest ever sales. Operating profit, highest ever at 705 crores, very good. If you look at the profit before tax, then this is also the highest ever, and if you look at the net profit, then this is also the highest ever. So these are good signs, these are good promising signs that we can see here. If we look at the share capital, then their borrowings are pretty much stable between 2000 and 2500 crores, so don't see much difference there. If you look at the shareholding pattern, then we can see FIIs have taken a good interest over the last 2 quarters. DIs are pretty much stable. The public holding is slightly gone down. Let's see if there is any big name investor here. So we can see Mukul Maharveer Agarwal just bought 1.5% stake last week. So clearly something good is cooking in the chart of Raymond. Now let's see here. This high was made back in, what is this, 2018. I just want to compare 2018 to the current results. So in 2018 the revenue was 5,900 crores. Right now it's 6,179. So not a lot of difference here. The big difference that we can see is in the operating profit. This was at 426 crores and this is at 705 crores. So their margins have gone up significantly. So they're not selling a lot more, but they're definitely making more money by selling almost the same amount. If you look at the profit before tax also, this is also highest ever, looking good, and net profit also looking very decent. So something's definitely cooking, really good volume build up happening here. If we can get the stock at 868 levels, then we can see a pretty massive rally coming in this again. So if it retests, let's switch over to the line chart. If it retests this zone, let's see. First, let's look at the stop loss that we would make. Let's switch over to the candle again. Let's put the long position here, and let's assume we get it at 876, and we keep this low as our stop loss. So a 16% potential loss, and if we take it just to this lifetime high resistance, then that's a 31% gain that we can make. But we have to but if we take the depth of this entire consolidation, and if it gives a breakout again above this line, then the next target directly comes in at 81 comes in at 2073 rupees. In that case, then the stock goes up to 136% in gain. Now this looks like a really excellent target. Not sure if this will get achieved. Let's look at the chart here just to understand what's happening. Okay, so here we can see someone's posted this nice idea, Mandeep Singh Kohli. All right, so he identified this breakout back in May 2021. Since then it's been continuously moving up, and his last target is at 1736. How did he arrive at this target? I'm not sure, but 1736 is also somewhere around here, which is a good 100% gain from the current level. Maybe he used Fib retracement, I'm not sure. Let's try and put Fib retracement and see what targets do we get. So if you put the Fib retracement on this entire move, then these are the targets that we can see right here, right? So this first target was somewhere close to the resistance area, as you can clearly see, and then the next target comes in at 1800 rupees. So I think we can use Fibonacci retracement here instead of our depth calculation. So this gives a return of 106% as per Fibonacci levels. This target of 2000 looks very damn high. I would like to instead take out my profits much faster. With the way the market is right now, I don't want to take too much risk and leave some profit on the table. If I can get 100%, I will take 100% and I'll exit the market. So I am adding this to my watch list. The price as of today is 968.75. What did we identify? Fundamentally and financially, company is improving. Mukul, Mahavir, Agarwal has picked up stake. Good risk to reward ratio. Can buy on retest of breakout level. Okay, so what's going to be our target entry price? Our target entry price is going to be somewhere around here, 881. Our stop loss is going to be this, which is 736. So let's bring it down a little further. Let's bring it down to 650. Let's give it a little more room because the market is extremely volatile. We are also going for a much higher target, so we can take a little bit more risk in this case. Sorry, stop loss is going to be mentioned right here, 650. And the target is going to be right here, about where, right here, 1821. Let me remove this just to avoid confusion. 1806. And we are currently waiting for entry. Okay. Alright, moving on to the next one, which is New Gen Software. Completed a downtrend, broke down this level, then made this support, broke that down as well. Now it's further down. Nothing much to discuss, just come back down to its previous all-time high level resistance. Maybe the stock might take resistance here and consolidate for a couple of months and then move up. No way to know that, but better to avoid the stock. If we look at Jamna Auto, then this is also looking very interesting. If we look at the weekly chart, we can clearly see this is a strong resistance level of 2018 that was taken out last year in November, and since then it's been consolidating in this range for a pretty long time. Any new bullish momentum will only happen above, let's say, above this line, this sort of a downward trend line that it currently has. If it does break this, then you can enter into a bullish momentum trade going forward. You can keep super trend as your stop loss, or you can use moving averages to figure out what levels you want to keep as a stop loss. But as of now, I don't see any massive target as of now. If you use the range calculation method, then according to that, the logical target comes out to 79% gain from this level. Let's take a quick look at the fundamentals to understand if this company deserves to move up, and if it does deserve to move up, then we can definitely take a trade in this stock. So let's see, Jamna Auto. All right, so ROC is very good, 26.5%. Debt to equity is 0.28%. Okay. Let's see here, what else? Anything else? Nothing else that makes any other difference. Now let's take a quick look at the sales numbers. Sales, highest ever quarterly numbers. Operating profit margin, very close to highest ever. Net profit is highest ever, and profit before tax is also highest ever. Very good signs, extremely good, promising signs. If we look at the yearly numbers, then the sales are not the highest ever right now, but net profit wise, they are posting their highest ever net profit currently. Even their profit before tax is the second highest ever right now. So this is a very promising sign. If we look at the balance sheet, then borrowings have gone up compared to the last year. I'm not sure why, but it's okay. It doesn't look something that is unmanageable. It's less than the reserves amount, so technically the company is debt free. And if we look at the shareholding pattern, then we can see that FIIs have been reducing their stake for the last 2 quarters. DIIs have increased their stake over the last 2 quarters, and in the public, the holding remains pretty much the same. If we look at over here, then we can see that there is someone by the name of Anant Rai Seth who has 1.76% stake. And then there's the Investor Education Protection Fund, and don't see any other big name investors right now. So fundamentally, company is strong. Technically also, it's holding on to these levels. It is not breaking them, which is a really good sign in the current market that we are. If we were to take this trade, then let's try and understand what kind of loss would we have to bear in this case. So from the current price, the target comes to about 68% gain, and the stop loss, the logical stop loss that comes is obviously this level, which is this low. So a 11.3% stop loss and a gain of 68.54%. Now technically this chart is looking really good to me, but I don't know, this structure somehow doesn't appeal to me right now. It looks like it's going to break this for some reason. It's just a gut feeling. There is no method that I'm applying here, but this entire picture that I'm looking at doesn't look too promising, so I'm not going to add this to our tracker, but I will keep it on my watch list to see if I'm going right or wrong. Also, if you look at the RSI, we can see that the RSI is sort of flatlined in this range, and it's currently at its lowest level. So let's see what happens. This entire picture of the last couple of weeks is not too encouraging to me, so I'm going to avoid the stock. If we go over to Nesco, let's see here. Apologies, my internet seems to be a little slow right now. So let me try refreshing something. Let me just refresh this page. Okay. Alright, we are back, guys. Sorry about that interruption. Nothing really exciting here happening in Nesco also. No need to discuss this further. Let's look at CSB Bank. Again, nothing exciting happening here. Let's look at Sunset Engineering. Nothing really exciting happening here as well. If you look at Minda Corporation, then we can clearly see that these are two resistance levels that it closed very strongly above, but now it seems to have come down very hard, retesting its previous levels now. And if we look at the line chart, then again we can see some sort of a head and shoulder pattern in formation here. So this is the left shoulder, this looks like a head, this looks like a right shoulder. So if we get a closing below this line, we can easily see the stock fall down to further lower levels. So at this point I would like to avoid this stock. Any close above this second resistance level will continue its bullish momentum. So after that we'll take a look at the stock. If you look at Star, which is your Strides Pharma, trading at, I'm guessing, rock bottom levels of 2012. Nothing exciting at all in this stock right now. Best to stay away and save your money and avoid any more pain. One thing I do notice though is there is an RSI divergence here. So you can see this low and this low is lower, but the RSI is showing a different picture here. Apologies for all the coughing. I have been sick for the last couple of days. So we might see some short-term momentum till 386 levels. So you could take that as a swing. But for the long term, please avoid the stock right now. If you look at MOIL, nothing terribly exciting happening here as well. Sequent Scientific, also in a downtrend. Nothing exciting happening here as well. If you look at Tata Coffee, then this is consolidating at its all-time high level for a couple of months now. So this was the resistance line, as you can see here, like this, that Tata Coffee was facing. It broke out above this resistance line, and now for how many months? Many months I've been following this stock. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 months. So almost more than a year the stock has been consolidating at this level itself, which is a good sign that it's consolidating at lifetime high levels, because that means there is definitely interest here. There is either accumulation happening here or distribution happening here for the next up move or down move. So let's try and understand that over the last 4 quarters, has the shareholding pattern changed at all in this company? Let's see. Tata Coffee. Also, if I'm not wrong, I think Tata Coffee is getting merged with Tata Consumer. If I remember correctly, that was the case. Let's confirm that right now in a couple of minutes. So if you look at the shareholding pattern, then FI very small stake, DI also extremely small stake. In the public also there doesn't seem to be much happening. Now let's try and find out if that Tata Coffee thing that I was talking about. Yeah, merger ratio, as you can see, something's happening here. Yeah, so under the scheme, shareholders of Tata Coffee will receive an aggregate of 3 equity shares of Tata Consumer Products Private Limited for every 10 equity shares held by them. Okay, yeah, so these shares are going to get merged eventually. So you can you would rather just go and buy Tata Consumer Products Limited shares instead of this. So right now there's nothing to do over here. Rate Gain Travel, newly listed company, trading at its lowest level right now. So again, nothing much to discuss here. Ratan India Power, same story. It's a penny stock, moves up violently, moves down even more violently, again moves up violently, again moves down. And we can see it's making lower highs and lower lows, so better to avoid this stock. If you look at car trade technology, then something interesting happening here now. So since the day it got listed in August, it was on a stellar down move. Okay, then we are seeing some stability return here, and if you switch over the line chart, we can clearly see that it has given a very nice clear breakout above this level, right? A nice clear breakout above this level. Now this could be a short reversal swing where it could go and test this previous resistance right here. So there could be a potential gain of 23%. That could happen. Let's look at the daily chart once. Yeah, so this looks like a next resistance over here. There's a small resistance here, but this is the bigger resistance that where it can potentially take a resistance. So maybe some short swing trade could happen. So if you can come back, if it comes back down, retests this level of 654 and it does not break it, then maybe you can take a short swing trade over here. That is one idea that we can see from car trade. If you look at data patterns, again, this is also a very recently listed stock. Don't see anything right now that can give us any indication of what's happening. Engineers India also trading at rock bottom levels. Better to stay away from this right now. If we look at Tega Industries, okay, something can be seen here. We can see a double bottom that's been made. Okay, and if we get a close above the high of the double bottom, then you can potentially see this stock go up to its next resistance level, which is somewhere around here of 25% gain. So again, a short swing trading strategy that you can employ. Very short term, you need to maintain a very tight stop loss here and only buy if you get a close above 484 on a weekly closing basis. Moving over to Star Cement. Okay, and Star Cement is also trading at rock bottom levels. Better to avoid. Then here also it's trading at rock bottom levels. Not rock bottom levels, but definitely not great levels here. Better to avoid. Looks like a double top pattern that's formed there. If you look at the monthly chart, you can clearly see a double top has taken place over here, and it's very near to breaking this low of 266 of the M pattern. So if that is taken out, then it's better to avoid this stock. Let's look at another chart, Supriya Life Sciences. Let's switch over back to the weekly chart. This is also trading at rock bottom levels, so better to avoid. If we look at Ami Organics, this is also trading very low levels since its listing. Don't see anything going on much happening here, better to avoid the stock. If we look at, what is this, the Hanuka Agritech, this also seems to be consolidating in a range since a very long time now. Better to avoid this stock as well. If we look at R Systems International, what does this company do? I'm not sure what they do. Let's take a quick look at what they do. Okay, so it's a leading provider of technology, artificial intelligence, analytics, and knowledge services. It partners with customers to enable and elevate their digital transformation with diversified digital offerings, including product engineering, cloud enablement, quality assurance testing, and digital platforms and solutions. Okay, looks like a majority of the sales happen by North America. All right. Let's take a quick look at their website to understand a little more about what they do. See, services, cloud enablement, digital platform solutions, IoT, product engineering, QA testing. What do they provide in AI and machine learning? Okay, so looks like some sort of a software and analytics company. Debt to equity 0, great. PE is lower than industry, great. ROCE is extremely high, that's also great. Let's take a quick look at financials to understand what's happening with this company. So sales is highest ever. Profit before tax is not the highest ever, but at 37 crores. But if you exclude this one quarter where you can see this other income, then the still is not the highest ever. Sorry, there's still this also. If you look at the net profit, then it's 30 crores, which is okay. If you look at the profit and loss statement, then let's see, since how long has this company been listed? Wow. So this company is listed since 2006. Started its journey with 24 rupees as the listing price. So 2006. So we have data going back to 2010. So the sales have gone up from 300 crores to 1251 crores over the last 10 years. This is a decent gain. If we look at the net profit, it's gone from 17 crores to 146 crores, which is again a decent gain. If you look at the balance sheet, borrowings are negligible. If you look at the shareholding pattern, FII has very small holding, DII has zero holding, and in the public, we don't see any big investors, but we can see someone named Bhavuk Tripathi is holding 35.53%. So that means a majority of the holding is in very, very strong hands. Now, ideally, if you were getting this stock somewhere around here at 94 rupees levels, this would have been a screaming buy. But the stock has already moved up to 326. It's already moved up to its highest ever price, and now it's corrected. So it might not be the best time to buy it maybe right now. I think we'll have to wait for some time to buy this. Let's switch back to the weekly chart. Switch over to the line chart again. And we can clearly see something of a double bottom formation happening here as well. If it gives a closing above 281, then this bullish momentum might continue. But for now, I think I'm going to avoid this stock because again, this picture doesn't look too good. It could very easily take resistance here and come back down again. But for a short swing trading opportunity, if you get a breakout above 282, then you can hold it for a 25% gain up till here. Alright, moving on to Gail, Gujarat, Ambuja Exports Limited. Don't really understand this chart right now. It's trading at its lifetime high levels for sure. It is making higher highs and higher highs and higher lows. That is a good sign, but not sure why this is moving up. This is a public sector undertaking. There is no real reason for it to continue moving up, and it's already pretty high from its previous resistance, right, of 2018. It's already moved up quite high. It could continue its bullish momentum, but I don't currently see any target that I can calculate for myself. So better to avoid this right now. Looking at Hathway Cable, trading at rock bottom levels, better to avoid. And let's look our last chart of the day as NOSIL. And let's end the show for today. So on NOSIL, we can clearly see there is a head and shoulder pattern that I've already drawn here. This is the neckline, this is the left shoulder, this is the head, and this is the right shoulder. Now in this case, the target will be the depth of the head, and we just bring it up above the neckline, and we can see our target comes to about 335 rupees, which is very close to its previous resistance. If you are a conservative guy, you can also take this as your target, 322. You don't need to go up till 335. So your target from the current market prices, 21% till the next resistance, and 26% from the till the target of the head and shoulder. So this can be a good short-term swing trading strategy that you can employ. I have already taken a position in this. So I am adding it to my tracker right here so that everyone can see how this position performs. What is going to be our stop loss? Stop loss in this case is going to be extremely simple. Any close below 224 and the stock will become weak. So the date today is 11 June. The price as of today is 265. Head and shoulder pattern is what we have identified. Let me rephrase that. Inverted head and shoulder pattern is what we have identified, and the target entry price is 265, which it currently is at. The target that I'm going with is this one, which is 322. So a gain of 21%. The stop loss is 221. Potential loss of 16%, and we are currently active in this trade. Oh, sorry, my stop loss is different. I looked at the daily chart while employing my stop loss. So stop loss is somewhere about 250 rupees for the stock. Okay, so I think we are done for the day. We have found this week 3 trading opportunities. One with a potential gain of 100%, another 2 short-term trades that we can possibly take, which could help us achieve some targets in a couple of weeks and not months. But overall, the market is really not in a good place right now to take too many long bullish bets. A lot of the trades that we have taken currently are in loss. So let's see what happens. I'm going to be updating the sheet with the status of each trade as it is right now, so everyone can refer this. And the link to the sheet for this Mighty Trades Position sheet is in the description box of each video, so you can always go and check out what's happening on each trade idea. So hope you enjoyed watching this video. Hope you got to learn something. Thank you and goodbye.